Hi, everyone. Welcome to the Canadian Passive Investing Show. I'm your host, 𝗖𝗽𝗶 Benesocky, and I'm joined by my co-host, August Biniaz. We have another incredible show for you today. Please like and subscribe as it helps us build our channel and allows us to keep bringing you great content and expert guest speakers. Our mission is to empower investors to earn passive income through real estate investing. So today we're joined by Seth Bradly. Seth Bradly is a real estate entrepreneur and an expert at creating passive income while working as a highly paid professional. He closed billions of dollars in real estate transactions as a real estate attorney, investor, and broker. He is the managing partner of Law Capital Partners, a private equity firm focused on multifamily and opportunistic acquisitions. He is a former big law attorney and is now the managing partner of his own firm, Bradly Law Limited, helping his clients with their real estate and asset protection needs. He's also the host of the Passive Income Attorney podcast, educating attorneys and other professionals on how to stop trading their time for money so they can practice when they want to, not because they have to. So we believe this interview is going to bring value to busy professionals looking to transition from their day job into being an active real estate investor. Also, passive and active real estate investors can learn from Seth's journey as he went from a real estate attorney to managing a real estate private equity firm. So welcome, Seth.
Welcome, Seth.
Thanks, guys. Really appreciate you having me on today. And thanks for the intro. Man, I need to shorten that up a little bit.
It's perfect.
Enjoy it. Well deserved.
Yeah. Now, Seth, maybe you could just start off by telling us a little bit about your background. And if possible, can you start from as early as possible?
Yeah, for sure. We'll take it back really far. So I was actually born in Korea, adopted by a wonderful family in a small town in West Virginia, which for those of you that don't know, it is in the middle of nowhere. I mean, I grew up in the country, in a log cabin, out in the woods. As you can tell, I probably didn't fit in there very well, but I had a great upbringing, a great time. But it was a blue collar background. So my dad's a retired coal miner. My mom's a retired school teacher, and they just instilled in me from the very beginning just a blue collar, work hard type of attitude. And as many good things that come along with that, there are also a few strings attached. And that's kind of what I call kind of that W-2 mindset, where you just think, you know, let me go out and get the best job that I can to provide for my family and make as much money trading time for dollars that I possibly can. So I went down that pathway and I started thinking, you know, what's the best job that I can get? And to me, that was at that point in time, let me become a doctor. So I ended up doing all that, taking the MCAS, getting into med school, going to med school. I went for about a year and 2 weeks before I just got up in middle of class and left. I literally 2 weeks into my second year, I had already been thinking about it for a while that this was not for me. And I just got up in the middle of class, I left, never looked back. At that point in time, I was trying to figure out what I wanted to do next, but I still had that same mindset, right? I was still thinking, okay, well, I'm not going to be a doctor. What can I do now? I was like, okay, well, I'm going to become a lawyer, because to me, that was the next best job I could get. So got my MBA in between there, but then ended up just going to law school, did really well there, got a big law firm job, you know, living the dream. That's what you're trying to do, is finish high in your class, get a big law firm job, and then, you know, work and make partner and all that kind of stuff. But during that time, it's not that I didn't enjoy the work, because I did become a real estate attorney. So I've always loved real estate. I've always been drawn to it. Even in my legal practice, I was drawn to it from the beginning. But, you know, I just started seeing that there were probably other ways out there to make a living where I wasn't going to have to bill 2,400 hours a year and just trade my time for dollars. I started being exposed to real estate entrepreneurs and other business folks that, you know, they were doing something different than that W-2 type of job.
Awesome.
Yeah, that's really great. And what really interested you in becoming that real estate attorney? You mentioned you were always in love with real estate. Was that kind of what took you? Yeah,
it's strange. I can't pinpoint exactly when I started being drawn to real estate, but it was pretty early on. I mean, even in like undergrad and college, I remember approaching my dad saying like, hey, let's buy this piece of land and let's build 4 townhouses on it. And obviously he said, you're crazy. Like, we're not doing that. And that would have probably been a bad idea. But, you know, I just always remember thinking I want to own real estate. Like, I've always just been drawn to it as an asset type, as a way to build wealth. So, you know, once I got into my legal practice, I started doing kind of general business and corporate work, which also had real estate involved. And then the more time that went on, the more I was just kind of drawn to that side and became a specialty real estate attorney.
Okay, that's awesome. Now, most of our guests share a consistent story about an aha moment in their lives, if you will, when they realized they could do more in life than just punching the clock at their job, as you mentioned. Maybe you can tell us about such a moment. That when did that moment happen for you?
Sure. I had a couple of them. I mean, I suppose the first one would have been really early on when I started the big firm job, making really good money, buying stuff I probably shouldn't have bought, getting the quote unquote golden handcuffs, buying a new 5 Series as soon as I could with my first paycheck, stuff like that. But, early on, I started seeing the older partners that we look up to, and, we're supposed to be like them eventually. And I started noticing, like, these guys are older, they're in their 60s, maybe even a few of them in their 70s, and they're still at their job. They're still working like crazy hours. They're there at the office before I am. They're even staying later than I am as a young associate. And I just started watching them and talking to them, and just realizing that the legal practice that they have is their life. Like, that's all they have at this point. I mean, they've been in that profession now for 40 years. And they're really good at it. They're really great at their job, but they've lost a lot of stuff along the way. They've probably lost some relationships. They've lost some of their passions. They've dedicated their whole lives to the legal practice. And, for what cost? I mean, sure, they made a lot of money, but they're still making a lot of money, and they've made enough to where they should be able to retire at this point. They have. They just choose not to because they're just they're stuck there. I think at that point in time, it's like, I'm really good at this. I know what I'm doing. This is where I get my joy from at this point, because I'm good at my job. And, I just started questioning things and started thinking to myself, if I do everything right, I'm going to end up like them. Like, if I don't make any mistakes and I work my way up and I end up a managing partner at one of these big firms, I'm probably going to end up like that. And I started saying, I've got to figure out a different way.
Yeah. And other than the mindset, there's also a fearlessness, if that's an actual word, involved as well, to be fearless, to even pursue or think outside the box, that, hey, this is, the best case scenario, this is what I'll be a full partner in a law firm. But as far as what is being lost is that time freedom. And in your case, from early on, even when you pivoted from medicine to law, that showed that, again, the fearlessness that existed. But law is a great foundation for many other practices. I'm an avid boxing follower and a boxing fan, and some of the greatest boxing promoters, like a guy named 𝗖𝗣𝗜, he started as a lawyer and eventually became a boxing promoter. In many other fields, a lot of times, people's backgrounds, or Peter Thiel, one of the earlier investors in Facebook, he was an attorney. So it's a great base to start. Or 𝗖𝗣𝗜 on Young Turks, that online show. He was a lawyer. So law seems to be a great start for many different businesses, especially in real estate. We're at the mercy of our lawyers, as we have noticed at times. We're waiting for an answer back, and it takes days, and there's an investor waiting for a question to be answered, and we're like, oh my gosh. But when you do have that legal background in writing letters and understanding, to have a litigious mind is very helpful. So it's a great kind of.
August already has it all planned. Every single one of our children, it has to become a lawyer first, and then they can do whatever they love.
Yeah, it's not even there's no negotiation. Yeah. They have to become lawyers, and they can go become artists or anything else after, but they have to be lawyers first. So
So that's really, thank you for sharing that story and that fearlessness that you had, because that's really inspiring to a lot of people.
Yeah, no problem. I mean, you're right, though. I mean, it does apply, like the skills that you learn in law school and becoming an attorney, there's a lot of them that apply to a lot of different things. I mean, whatever it might be that you're going into, especially with respect to business or real estate or something like that, where, again, you're at the mercy of these attorneys that they've got, 50, 100 other clients other than you. So when you ask a question, you're in the hopper and you got to wait. If you already have at least a good idea of what the answer to that question is, maybe you can go research it yourself or figure it out. And then just doing due diligence and risk management, and just trying to think about things like, hey, if we do this way, are we going to get sued? It's just a good question to ask yourself. And being an attorney, you're kind of trained to think like that.
For sure. And when you look at starting out firms and businesses, there are two main key people that come and join a starting company, and that's a in-house attorney and an accountant. So those are great backgrounds to have anytime you want to start a company, but we can kind of move on.
Now, my next thing, can you tell us about LCP Law Capital Partners and any projects that you guys are currently working on?
Yeah, for sure. So we're a private equity company, real estate private equity, raising capital for other folks' deals, as in we are kind of the capital raising arm, and we partner with other operators that are going to be running the properties themselves. Of course, we do, investor relations, due diligence, our own underwriting, all that kind of stuff that goes along with it. And obviously with my legal background, I provide legal services to, varying degrees, whether that's actually being the real estate attorney on the specific deals and handling that work, or just kind of overseeing the other attorneys that are on the job. But yeah, we're a private equity company in real estate, mostly multifamily assets. We also look at other opportunistic opportunities that are out there, because I like to take a contrarian point of view. When people are running away from something, maybe you should take a second look at it and see if there's some opportunity there. When people, for instance, during the pandemic, you're running away from hospitality and retail and senior housing. Well, maybe there's some opportunity there to pounce on something and get it for a little bit cheaper than you would have been able to before. Yeah.
No, that's great.
Oh.
Yeah, go ahead.
And current projects. I don't know if we want to jump into this now. We jump into it later, but we've got a build to rent community. So for instance, that's an opportunistic opportunity. It's something a little bit different. It's development, so it scares people away a little bit, but we can dive into it. A lot of the development concerns that are typically associated with, let's say, a ground up building are taken away with a build to rent community. Namely, you build one house, you can rent it out. You don't have to wait until all 10 floors of a building are complete before you start renting the whole thing out. You can do it piece by piece. And before we even start raising capital for this particular deal, everything's entitled. So all the groundwork is already laid out there and done. And that's what can really give you the big delays and cost you some holding costs.
For sure, and we're really excited to discuss that topic with you. And just one point on that item about building in phases. Even in multifamily or even larger projects, those projects are built in phases where the developer builds it. If it's built to sell or built to rent, then that allows them to sell or rent that first phase and then move on to the next phases. So now to even fractionize that even farther, to have a single family that you can rent out right away, it's incredible. But let's kind of take a step back and discuss your company and this concept of partnering with other operators. It seems to be it's a common occurrence, but it seems to be a new concept when speaking with investors. Here at CPI, our business model is very similar. Initially, when we started out, we wanted to be the operator, but in our case, we're international investors. We're investing all the way from Canada. So for us to have the infrastructure in place, and by infrastructure, I mean having the right employees, consultants, advisors, the asset manager, property manager, the brokers, everybody in place, and some in-house employees, it would have been too cumbersome and costly for CPI at this stage to have that. So we went the same route as you, to partner with active operators. Now, the benefits this also provides is, if we did create the infrastructure in a certain regions we want to be in, for example, Florida or in South Carolina or in Arizona, we wouldn't be as quick to be able to pivot. Just like you said, we're opportunistic. We want to find the best deals possible for our investors, and at times deals come and go very quickly, and the ability to partner with the best operators in many regions allows us to be very dynamic and more successful. So just wanted to kind of touch on that.
And cherry pick the best deals.
Yeah, for sure. I mean, there are a lot of advantages to the business model that we're talking about here, namely the diversification. You kind of touched on that, but if we're operating as direct operators, we own the property, we're doing the asset management, we're operating the buildings, we're leasing up the properties, all that kind of stuff. If you're going to be really good at it, you're probably going to be really localized to one market or one kind of region. Whereas, folks like us, we're able to bring our investors diversification that those operators can't, because we can partner with operators in, let's say, Florida, then we can partner with operators in California and New Mexico and Ohio or wherever it might be, and you'll get that geographic diversification and other types of diversification as well. I mean, if you can invest in multifamily and self-storage and senior living, and if you're the direct operator of those, you're probably not very good at all of them. You're going to have to pick one to be really good at. Maybe there's a couple that you can spin off. But the way that we do it, we're able to partner with the best operators in self-storage, the best operators in senior living, the best operators in multifamily. So you can diversify your asset type, the sponsors that you work with, and the geographies. And on top of that, what we're really providing is a service to, share our network, because we're kind of in this network that we know all these folks, we know these sponsors, we know their reputations. So we're not going to bring you a deal with a sponsorship team that we don't trust ourselves, and then we're not investing in the deal ourselves. So we're doing the due diligence on the sponsor, the market, and the deal so that you don't have to. And it's not like you're not going to, you should, but at least we're doing that upfront work first before you can get your eyes on it.
Absolutely.
Nice.
No, genius. It's also a second set of eyes. I mean, the investors can see is a second set of eyes. You have a team overseeing another team to ensure that it's done. And both teams are being compensated relative to the performance of the asset. So it's important that the project makes sense, and having a strong team in place in every case scenario. And I would like to come back and chat with you again about your project. Now, my background is in ground up development here locally in Vancouver. I pivoted to focus only on US multifamily value add. But when I heard you speaking about the project you had, I fell in love with it, because my background was building single family, eventually multifamily. But when you spoke about what you guys are doing, it was really exciting, really interesting for those two main points. One is you building to rent single family. It allows you to build in phases, in a lot of phases, because just like you said, you build it. How many single families are you guys building?
97 units.
So
Nice.
97 single family homes,
build and then you rent
as soon as you build one, it's ready to be rented. Obviously, you do it in probably bigger phases than just a single home. But I fell in love with it right away. Now, on the private equity side of it, on the raising capital side of it, same concept is in the deals that come across our desk when it's a multifamily, because the market is very competitive, that capital raise needs to be done very quickly. All the legal needs to be done. When you're doing a ground up development project,
kind of shuts down, and you're like,
Exactly.
it's performance time.
Exactly. But in this type of deal, it gives you a bit more time.
Yeah.
It allows your investors to learn about the project a bit more.
Totally,
So it gives you a bit of time as well. So that's why I got really interested and even just started a conversation to possibly partnering with Seth as well. So tell us more about your project. Where is it at? Talk to us about how you came about finding this operator. Just tell us more about it, if you may.
Yeah, so it's in Lafayette, Louisiana. It's a growing market. It's very similar to like a really good Midwest market. For instance, think of Kansas City or Indianapolis or a place like that. So growing, it's got all the great metrics that you look for. A key component is that we're partnering directly with a builder, so that we're not hiring, a general contractor to do this stuff. Not saying that model can't work, but it's better if you have a builder that's a partner, and that's who we have as the operations partner on the deal. So we're able to actually save on some of those building and construction costs because we're getting a pretty good deal on the labor. And on top of that, for this particular deal, and this isn't the same for all deals, but we had some capital already put aside that the builder had already invested. So he had already bought the land, already got it entitled, everything was already done. And we already have 7 houses complete as we speak, and we're still building along as we go. So we're not really up against a huge time crunch with respect to the capital raising piece, because we were able to front load some of the costs out of our own pockets. So there's a little bit of a risk there, I guess, but we're confident we can hit that raise, and we're confident in the project.
Incredible. Now we might have some Canadian viewers watching this show, and they're going to be surprised about build to rent single family, because the construction cost is extremely high here in Canada, and the land price is also high. So economically it makes no sense because of the extreme low rent to value ratios that exist. But I'm guessing, I know that the US prices, obviously construction costs are substantially lower than here in Canada. But now you got also low cost of land because you're talking about Louisiana, and to add the low cost of construction. Now that rent to value ratios is definitely increased, where it creates that surplus to be able to pay the mortgage payment, pay the investors, pay the taxes and fees, potentially property management if needed.
Yeah. Our building costs are fairly low. I mean, to build one of these things, they're about 1,300 square feet, 3 bedrooms, 2 baths, brand new, open concept. But they're built in a way that they're able to be built quickly. So, if we have these structural beams, they're going to be, 16 feet because that's the length of the beam. They were built to do this. You know what I mean? They were built to be built fast. So like the schematics and stuff were drawn up in that particular way. And we're in it about 125K per house. And then each one's going to rent out at about $1,500 is what we're projecting right now. But that rent as we speak just keeps going up, by the month. So we'll see by the time we're done.
$1,500 a month for rent?
What's that?
You said about $1,500 a month for rent?
Yeah.
$1,500 per month, and the total construction cost is 130K. And the land cost, I don't think, is substantially more added on there because
that's the key is you got to get the land cheap. So you want to find a good market, obviously, but you want to try to get that land cheap. So you might get pushed out a little bit further out of that. You're not going to be downtown Lafayette, but you're going to be, within 10 minutes of it.
That's incredible.
Yeah.
Unheard of numbers here. Like we're in negative cash flow all over the map here. So that's a really cool business model.
Yes. And now talking about being opportunistic and pivoting and having the best investment for investors. Now, these single families, they don't have to be rental forever. They could at some point be sold as single units. I'm assuming here in Vancouver in particular, a lot of rental buildings they were converted into condo conversions as they call them, because real estate prices flew through the roof and it economically didn't make sense to just rent them out. So a lot of investors turned apartments into condos. Unfortunately, that caused the supply to go down drastically and rent prices to go high. But you can see that in business that can be kind of shifted or changed at times. So talk to us about potential long-term exit strategies that could exist.
Yeah, I mean, that's a great point on this deal, is that there are multiple exit strategies. I mean, the primary exit strategy is to complete it, get it rented out, and sell it to a big private equity firm like BlackRock or somebody like that, because you may have seen in the news that they're buying up these communities and they're really interested in the space as well. That's primary exit, but there are other ways to do it. You can sell them off as that's worst case scenario. We don't want to sell each one off as a single family house, but we can do it because during the entitlement process, we parceled out each house individually. So each one is on its own individual parcel. We don't have to worry about that down the road. So if we need to split it up into one or packages of 10 or 20 or whatever it might be, we can sell those off.
Amazing.
Nice.
Amazing. If your real estate prices double, trust me, you would love to sell it individually.
It's really cool.
Yeah, no. So now, kind of, let's change the conversation about the private equity side of our business. Obviously, the equity is a very important part of our business, and that equity coming from investors. In most cases, passive investors. So talk to us about. Sorry, I think I stole away this question.
Please go ahead.
But talk to us about that process, about cultivating and nurturing relationship with investors. Now, with your background in law and with the assistance you provide to attorneys, I have many lawyer friends. Most of my friends are lawyers, and if I wasn't doing this, I probably would have ended up being a lawyer. But the average income for a lawyer here in Canada is $90,000, and with a high cost of living, that's a very small amount of income. So it's very important for lawyers to be able to make smart investments, so they don't have to be working at a job, when they're in their 70s. At least they don't have to. Not that they don't, maybe they want to because they enjoy it. But talk to us about the process of cultivating and nurturing relationship with investors, in particular, other people in the law space.
Yeah. So as you mentioned, my bread and butter is attorneys because I'm an attorney and I've been in their shoes. I mean, I can speak to them directly and say, I used to work in big law. I used to do this. I used to bill 2,400 hours. I know what that's like. I know what it's like to have 50 partners breathing down your neck. I know exactly what that's like. And I'm here to help you because that's what I did. I went through those different stages where I started investing in duplexes and single family houses and doing wholesales and fix and flips and all that kind of stuff, the really, really active types of real estate investing. And when you're working at a big firm or working at a law firm, or any other business professional, if you're a doctor or an engineer, anything where you don't have a lot of flexibility with your time, it's going to be really difficult to scale any kind of real estate business that involves flipping and wholesaling and single family houses. So what you got to do is figure out, well, how can you scale? What can you do that's a little bit more passive? And that's when I started looking at commercial real estate, and I was advised rightly to invest passively first. So that's how I got introduced to that. So I invested passively first in a few deals before going to the active side. So I think, that's the key. I mean, cultivating relationships with your audience, whoever they might be. For me, it's attorneys. For you, it's Canadian investors, maybe real estate brokers, folks like that. It's finding someone that's been in your shoes is a really key thing where you can relate to them and say, I know where you're at. Let me show you what I've done and how you can do it too, so that you can start buying back your time piece by piece. That's the way that I like to say it, because that's what it is. If you invest in one of these investments passively, you start getting that quarterly check. That quarterly check isn't just money to me. To me, that represents time. That represents a piece of your time that you don't have to earn money for. And eventually, after you invest in a few of these, they'll start piling up and you'll be like, oh, I see this. I see this is going to work. And then when you'll see, people's mindset shifts and they're like, okay, I'm going to start plugging as much money in these as I can. And I'm going to start working half time or part-time or whatever it might be, or step away, maybe start my own practice, whatever it might be, but some way that you don't have to, so you have more freedom and flexibility and fun in your life.
Awesome.
What an incredible, I just love it. I
Yes.
love listening to you talk about that. I think it's just, you
For
can
sure.
change so many people's lives and help them out. That's so great.
Yes. And now, as far as just going back to the business side again, now, as far as deciding what regions you want to invest in, again, with the business model you have, you're much more versatile, but how do you go about deciding what regions? Is it just the deals that come across your desk and you decide if the region makes sense, or do you actually actively go out and look for operators in certain regions that have shown certain data or certain metrics?
Yeah, I mean, certainly the market is important. I mean, there's definitely things you've got to look at, namely your job growth, your population growth, and your rent growth. Those are the three key ones. And there's other metrics that are related to that, like, your industry diversity, your employer diversity, all that stuff factors in. But that is always second to the sponsorship team. Like, you want to partner with sponsors that know what they're doing, that have a track record, that have a good reputation within the community. And that's number one. So I have relationships with specific sponsors that I like to work with, and I continue to network and meet other sponsors that I like, and I'll probably do deals with them down the road. But that's number one. Look at the sponsorship team first, and then after that, look at the market. And then after that, look at the specific deal.
Yeah. And just to add to that about the sponsorship team, the passive investors looking to invest in this space, of course, is important what the deal is and the deal numbers and what have you. But the sponsorship team is even more important, because in a case of downturn, in a case of something happening with the occupancy dropping, it is that trust in the management team. It is the management team that's going to bring the deal back to to it being profitable again. So it's very important that, just like you said, now this is not only for us looking to partner with operators, but also for passive investors looking to partner with other groups is to see who is the team, who is the group. And in our case, having two different teams, looking after teams and after a project is even much better.
Yes, 100%.
Yeah, definitely. Got to look at that sponsorship team, number one. I mean, there are a lot of great markets, right? I mean, of course, you hear about the really hot ones, like, let's say, to me, like some of the best are Charlotte, North Carolina, Austin, Nashville, Denver, places like that. It's really hard to find a deal in any of those places. So outside of those really, really super hot markets, there are a ton of great markets, like I just mentioned in the Midwest, Indianapolis and Kansas City and Columbus and Cincinnati. And then if you go into the Sun Belt, you've got other, Raleigh and Winston-Salem and Jacksonville and all the markets in Texas. There's a lot of good markets. So, vet that sponsorship team first. And then when they bring you a deal and it's in one of those good markets, then you're like, okay, let's pull the trigger.
Pull the trigger.
No, long term, looking at this long term, do you ever have any plans on being involved on the operational side or starting an operational division of your company?
Yeah, probably. I try to stay away from it, but I mean, we own quite a few properties in some of these Midwest markets they don't cost a lot to get into. For instance, right now we're under contract for a 25,000 square foot office building. It's mixed use building in Cleveland, but it's in the right part of Cleveland. Now, I wouldn't bring too many passive investors to a market like that because it's a little bit riskier, but because I've flipped a ton of houses there in the past, I know each and every street of Cleveland. So I know that this particular asset is set to be fine in the future. And then there's others in Cincinnati. We have a medical office building under contract as well. So there's just, I am getting caught up in the direct ownership, but I love the scalability of, partnering with other operators. And again, like we talked about, the being able to diversify across a ton of different markets and different sponsorship teams.
For sure. You speak our language there. We love it.
Definitely.
Yeah.
Great.